Stephen Meade again, back with another Bullseye Guy podcast. We're going with a full session here, and Bitcoin 100,000. What does that mean? I'm going to lay out, in my opinion, the top 10 reasons why Bitcoin, BTC, can make it to $100,000. And to be clear, I'm not a crypto hypo enthusiast. I'm not an over promoter. I'm not somebody who is pushing this just to try and get things out to make it work. I truly believe there's a lot of reasons Bitcoin can make it to 100,000, and I'm going to go through them. I'm going to lay them out not only from what's called a retail standpoint, small crypto investors, but the institutions, the big guys, the money that's starting to move in, and we're going to go from there. But before I do, a lot of people compare Bitcoin to all kinds of things. Is it a crypto? Is it a currency? I believe personally, in my opinion, Bitcoin is sort of like gold. Now, why is that important? A brick of gold costs how much? And you may not know the answer. I actually didn't. I had to look it up every time. A single brick of gold, one unit, $750,000, more or less at current market rate. What do we know about gold? We probably won't buy a brick of gold. We can't carry it around in our pocket. It's not very portable. You can buy a $50 gold coin. That gold coin goes up and down by the same percentage as that $750,000 brick. All of those things are really important. Here's one of the other ones. Most of us, if we buy gold, very few percentage people globally do, but if you do, the reality is you probably don't have gold carried around in your pocket or sitting in a safe at home. You could. I know some of the bigger guys might. You might have an inglet or some coins, but to have bricks of gold sitting around, no, you have a certificate. Why is that important? You actually have a digital certificate telling you somewhere gold exists. So a lot of times people go, oh, well, Bitcoin doesn't do anything. It doesn't have a P&L like a company. Well, neither does gold. Gold doesn't have employees. It doesn't have a P&L. And technically, while you think and believe it's a physical asset sitting somewhere, you're led to believe that when you buy it, that digital certificate telling you you own gold has the value. So Bitcoin, yeah, people will eventually get it. It's digital, but so is gold. Why do I think it's going to go up? Right now, Bitcoin's been on a bit of a run. We're going to the end of 2020. So here's my 2021 predictions for Bitcoin 100,000. Number one, global access. I'm comparing Bitcoin again to gold, a little bit like stocks. It's a conflated issue. But with Bitcoin, you have global access. Bitcoin is traded on hundreds of exchanges around the world 24/7. If we think of the US, again, a lot of this podcast is more for my institutional guys trying to get your head around Bitcoin. You could trade on the OTC bulletin board, small, penny cap, limited stock, limited volume. You could trade on the big board, NASDAQ, or the big board, right? The stock exchange, NYSE, trillions of dollars. But that's one market, one exchange, one geography, one stock. For the most part, a big company stock is listed on a single exchange. It might be on another one. You might be on the US and maybe in Australia at the SX, but for the most part, one stock, one exchange. Bitcoin, global, kind of like gold. People can buy gold around the world. Stocks are sold on exchange. So this aspect of these global exchanges really can create massive volume, massive buying opportunity, much more participants, which leads me to reason number two. Again, this is macro visions, but it's also micro, the number of Bitcoin addresses. So again, it gets a little confusing. Onboarding for Bitcoin is still challenging, but basically you have to have an email address and a valid ID. And you have to go through some steps. It's still a little cumbersome, but more and more people around the world, what in the traditional finance sense of the US, we call retail customers. The retail customer, that guy that might try and buy stocks or might try and, learn how to invest, that small customer, that retail guy, there's more and more Bitcoin addresses that are coming online. That means more people are interested in the space. More people are potentially buying. And again, remember point number one, these are global. So as more people come on these different exchanges, that's more and more people buying the same asset class. That same Bitcoin unit means more and more demand. Now that demand is actually going to increase as onboarding gets easier. Again, it's still cumbersome. We're in the early days, but there's also a big difference. Mobile wallets, mobile access. Now, a lot of us in the US, and we're privileged, we can do our online banking on our phone. But as you look around the world, a huge percentage of the people only do business on their phone. That's their primary access, including potentially banking, if they even have banking. You have a lot of the unbanked. People are trying to get access to 1 billion or 2 billion people that maybe aren't even online yet. There's massive opportunity, and these mobile wallets allow you easy access to actually sign up, potentially acquire or purchase Bitcoin, BTC, and then move it around. It's digital. I just did this with my dad the other day. I posted it. It was funny. My dad said, I don't get Bitcoin. How's it work? And I said, well, Dad, I tell you what, for $100, I can write you a check right now. This was on a Saturday. And you can wait till Monday and drive to the bank and cash it, and they'll give you cash. Or you can deposit that check in your account, and a day or so later, you'll get access to that $100. That's just how money works. Or let's sign up right now. I'll get you started on Abra. My buddy Bill runs Abra. I love Abra as a wallet. We got him signed up, and I transferred $100 of what's called USDT. Again, we're talking about Bitcoin here, but how do you get these people started? USDT is just a dollar denomination, and I transferred it to him an email, a really long address. 20 minutes later, it's in his account. I said, do you still want that check? And he just looked at me and shook his head. So as more people come on, these small dollar denominations are important because more people can access the wallet and can potentially buy in smaller amounts. Again, going back to where I started, a brick of gold, $750,000. A gold coin might be $50, or a $50 gold coin might be more or less based on the. But the point is, if you want to buy a smaller amount, if you want to buy $50 of Bitcoin, or $100, you can. The price of Bitcoin is somewhat irrelevant, just like the price of a brick of gold is irrelevant. If you can't buy a $750,000 brick of gold, but you can buy a $100 gold coin or a $50, that's what you buy. But as gold goes up and down, that $50 gold coin goes up and down by the same percentage as a $750,000 brick. Think about that for a minute. The wealth disparity. 97% of the world's population has never been given access to true financial instruments. What do I mean by that? Well, in the US, we've got a bunch of ways to go online. If you want to go buy stock, you can. If you want to buy Apple or Amazon, great. Amazon, I don't check because I don't trade Amazon. Amazon, I think, is $3,000 a share. Not everybody's running around with $3,000. And if they did, they might not be able to buy one share of Amazon, much less fractions. Now, I know Robinhood's out, and I love what those guys are doing. There's new kind of technologies, but for the most part, the world has been shut out. If you're somebody in India or Mexico or the Ukraine or China, and you've got a small amount of money, that $50, $100, $200 might be important to you. That might be what you have to invest. And what's your opportunity to get a return? Well, in the US, you're locked out. You're not getting into the bigger stocks. Again, they're less risky, lower return. You might get into some of the penny stocks, the lower, more volatility, higher return. So are you a speculator, are you a trader, are you long-term? But these small dollar denominations in the wealth disparity, as more and more people can get access, Bitcoin becomes a very interesting type of investment where you should look at Bitcoin for the percentage return. Don't look at the price. The price right now is 24,000. It might drop, it might go up, but what's the percentage return for the year? It's been massive. And you've got guys who bought in. I love the story with Michael Saylor. I'll talk about him a little while later. Great guy in the industry, put $480 million, I think, in. Bitcoin was around 11,000. Bitcoin went all the way up almost to 18 or 19,000. And I think his portfolio went up to close to 800 million, I'm not sure. And Bitcoin dropped. It fluctuates. And the press, not understanding, said, oh, Michael Saylor lost $100 million. He didn't lose $100 million. Bitcoin went down. His fund was still up almost $380 million. It did go down, but not only did he not sell, he actually, I just read the other day, bought more. So here's a Michael Saylor's group, MicroStrategy, $480 million. It went up to almost, $1 billion, 800, 900 million, dropped back down. He bought more. That same guy sitting in Mexico, that might not be 480 million. That might be $480. That wealth disparity, as more retail people come on, is going to drive more volume. And that's sort of globally. That's the macro side. Where's the real change coming in? What's really going to drive Bitcoin 100,000? It's the institutions. It's the institutional buy-in that's starting to happen within the United States and globally. And what do I mean by that? Institutions, hedge funds, billions and billions of dollars. Some of them are close to $1 trillion. Pension funds, ones like CalPERS in California, $350 billion fund. You've got institutions, you've got companies, public and private companies. What do these guys do? Their job, rightly or wrongly, is to make money. So when you look at a portfolio, when you look at asset diversification, you have to look at Bitcoin for the return, even if it's a risky investment. If a fund starts moving 1 or 2% of their portfolio into Bitcoin as an allocation, it's irresponsible for them not to. If you look at the percentage return of Bitcoin as an asset versus other asset investment opportunities, it's been the #1 performing asset. Is it risky? Yeah. Is it volatile? Yeah. But it's also consistently gone up. You have a responsibility sometimes as an institution or a pension or a hedge fund or a public company to manage risk. It's becoming more risky not to have a percentage of capital in Bitcoin. So what does that mean? As a big company starts moving, right? As a Guggenheim with a Scott Menard who says, hey, we may start moving 1 to 3% of our capital into Bitcoin as a strategy. Whether it's a hedge, whether it's a diversification, everybody's going to have a different reason. A lot of people are trying to figure out, oh, what's Bitcoin? What's the reason? Is it a hedge? Is it gold? Is it a credit? It doesn't matter what it is. As an investment class return, it's been a performing asset that you have to look at. So if a big company like a Guggenheim moves 1%, that's $2-3 billion they're moving over into the buy side. Now, those of us who know anything about supply and demand, I'm going to get to that next. The buy side of this is important, right? A lot of retail guys coming in, $50, $100, $200. You might have 1 million new wallets, and those 1 million new wallets put in $100. That's $100 million. Great. A Guggenheim could move $1 billion in an afternoon. The massive amount of institutional money that's coming in, and even public companies, anybody that's had one, right? Or private companies sitting on a lot of cash. You have what's called TMS and CMS, fancy words in the fintech industry. The fintech's a fancy word, financial technology. TMS, treasury management services, CMS, cash management. If I'm a company like Apple sitting on close to $200 billion in cash, what do they do with that cash? Where do they manage it? How do they diversify it? Does it just really sit in cash at a negative return? Do they move it in sweep accounts? Do they put it in investment classes to get potential returns on the corporate asset? It's balance sheet management. And as more and more big companies start looking to do this, they're all going to need returns. But big money drives more demand. How do stocks work? And gold again. Gold is a little bit on emotion. It's a little bit on, do I think it's going to go up? Do I buy it against inflation? But a lot of gold is based on supply and demand. The more demand there is, the limited supply theoretically drives up price. Bitcoin, Really interesting. Bitcoin by design. And I'm not going to go fully into this. Anybody that understands Bitcoin gets it. If not, it's okay. But gold, we believe, has a limited supply. And what we know about gold is we think it's limited, and it probably is, but also the more gold comes out, the easy gold's already gone. And the gold that's still left in the earth is probably harder to mine, takes longer, and therefore has a correlation that makes it more expensive. So you've got time to create the gold and the supply. Bitcoin has both built in. And again, I'm not going to go into the technology side of it. You don't fully need to understand it anymore. You really need to know how gold's brought out of mines in Zimbabwe. But what you should know about Bitcoin, it has a built-in limited supply. That supply is 21 million, if anybody wants to know. And Bitcoins are created by what are called miners. Again, I'm not going to go into it, but what you should know is, much like gold, Bitcoins used to be really easy to create in the early days. And as time goes on, by mathematical design, creating a new Bitcoin unit becomes more expensive, longer, more difficult. That means they're more difficult to create, just like gold, thereby driving up the price. And as more people come in on the demand, right, the demand is there, the supply is limited, price theoretically is going to go up. So Bitcoin at 25,000, if institutional money starts coming in, you've got a limited supply, you've got a more difficult supply of Bitcoin being created. You have a big supply of Bitcoin supposedly that's been lost through the years. People didn't think it was worth anything. They lost what are called their keys. That would be like you buying Apple in the early days, but you lost your stock certificate, and there might not be a way to prove you actually had that stock anywhere, right? Grandma gave you stock a long time ago of 1,000 shares of some fruit company, and you lost the stock certificate and you're not on the registry. By design, you're lost, but that's not what's happening. Number 8 is what are called holders. And it sounds weird. It's actually HODL, HODL. It stands for hang on for dear life. These are the Bitcoin enthusiasts, not the Bitcoin maximists. People are always like, oh, are you a Bitcoin maximist? Is Bitcoin going to be the only survivor in crypto? The people that ask that don't know what they're talking about. Bitcoin isn't going to be the lone survivor against other cryptos. It's not even the same. Much of the cryptos are tokens, are tradable assets like penny stocks. That's like saying, is gold going to be the only survivor? Well, you've got silver, you've got platinum, you've got nickel, you've got copper, and then you still have beans and corns and rice and beef. There's not going to be one winner because they're not all designed to do the same thing. But these people that have bought Bitcoin, they hold it. Now, they've held on for dear life. We're the same way. We've had Bitcoin came in, a while ago for us at 9,000 and dropped to 3,000, and now it's at 25. Like, it's tough. You have to have a stomach when your holdings start dropping 20, 30, 50%. But Bitcoin's consistently gone up. What does that mean? You've got long-term holders. People are not selling. And because they're not selling, you've got, again, a reduction in supply. And the more the Bitcoin goes up, those initial holders, those crypto enthusiasts become more and more excited and start creating more publicity. They start driving what is number 9, the trend. And in investing, the trend is your friend. So the trend for Bitcoin is, as it starts to rise, a lot of the early guys, a lot of the investors, a lot of the participants, as they're called, because there's still some legal, is it an investment, is it not? The holders of Bitcoin are holding on, and they're promoting, they're more enthusiastic, Bitcoin to the moon. Well, the more people say Bitcoin to the moon, the more people think they're missing out. And if they're missing out, that drives more demand into what becomes limited supply. So the trend is your friend. But it leads to number 10. And number 10 is the big one. It's a fun one. I'm going to turn my sheet over here because I do a lot of these from memory, and I think I pretty much have it done here. Here we go. Number 10, publicity to justify your decision. People make decisions emotionally, defend them logically, everything like that. Maslow's hierarchy of needs. We're driven by recognition. Well, I love a bunch of the guys I'm going to mention. Some of these guys have really big egos, as they should. They've been massively successful, and they've worked hard for it. I don't begrudge them. I actually follow them. I try and learn from them. But these guys who've been really successful have egos, but they also like to be right. They don't like to make bad decisions. And sometimes when they start putting themselves out, what I call over the bow, they lean forward into a new asset class or an investment. Some people have to plant a flag and say, here's what I believe, and oh, God, I hope I'm right. Let's look at Mike Novogratz, Galaxy Digital. Mike came in the early days, came out of, I think, Goldman Sachs. I've met Mike and his team a couple of times. Great guy. Mike was an early proponent. Came out of the finance industry, but said, hey, there's something here. I believe in it. I'm going to put my money behind it. I'm going to learn. I'm going to invest. I'm going to try and build companies around this new technology. But the fundamental aspect of Bitcoin was a driver because it was a fascinating new asset class. Now, Mike might have had a bunch of different reasons. I've actually never spoken to him directly. I want to try and interview him here one day. But again, Mike was one of the early guys that said, I believe in this new section, this sector. Whatever you want to call it, I believe in it. And he put his ego out there and said, here's what I believe. But he also wants to justify it. And as more information comes out, Mike gets more credibility. Mike called it right. He gets more and more credibility, more people follow him. That creates more institutional buy-in because they're like, holy crap, look what Mike did. We should have listened to him 3, 4, 5 years ago. Who else should you have listened to? Cameron and Tyler, the Winklevoss twins. Love those guys as well. Met them years ago at Clinton Global Initiative. This was after the Facebook days, early in Bitcoin, and they were big believers. They jumped in early. They've been on this bandwagon of saying, here's what's going to happen. And they may have been chastised through the years, and the finance guys, look down on them. But you know what? They have a company that's about to go public under the traditional finance structure. And I think it's probably going to go public at about $25 billion. I don't think many people are looking down their nose and laughing at them now. Not that they were before. I mean, Cameron and Tyler are great. They've done cool stuff, but the finance industry has looked down on Bitcoin. You've got these, excuse me, you've got these smart people, and I'm not going to name names. A bunch of you in the finance industry know them. Some of them have come across, one of my favorite, Mark Cuban. Mark loves Bitcoin. He hates it. It's going to be big. It's not. It's a Ponzi. People jump all over the place, but it's a new asset. They're learning it. Cameron and Tyler jumped in early. Not only did they believe in the space, but built a company around it to make it easier for more people to participate in the space. All the way back to number 2 and number 3. They've made it easier through Coinbase for people to come online, sign up, learn about crypto, get their feet wet, and now that institutional money is coming in behind it. Again, another big one, Michael Saylor with MicroStrategies. I talked about him earlier, obviously, but Michael, he spent, I think I saw an interview with him with Anthony and the Salt guys, which again, the Salt team's amazing. They're still trying to get their head around how this works, and they're doing a great job putting people in front of our audience and teaching them. But when Michael Saylor was on, I think he said he spent 3 years investigating this asset, right? You're not going to move $480 million on a whim because a guy in the taxi cab started talking to you about Bitcoin. The guy on the subway, the guy next to you on the plane. The reason I bring that up is years ago, 2017, 18, whenever this run was of Bitcoin the first time, I had people sitting next to me on the plane. Hey, man, have you heard about this Bitcoin thing? I think I'm going to buy it. Taxi cab, random guy on a plane, subway. That was early. That was a mistake. That was a false enthusiasm. This is real. Michael moved his money over. As I said, I went through the numbers. Don't hold me to them. I think it was 480 at 11,000 for a Bitcoin unit. Bitcoin's up at 20, which means he's almost doubled his money. It dropped back to 18. He didn't lose. It just went down on paper. Again, in the investment world, you don't lose if you don't sell, if you have a long-term strategy. Not only did it go back up, I just read again, I think he either bought another billion or moved his assets up, but he bought the dip. He believes in the space. It's no different than gold. You could have $1 billion in gold, and if you think, depending on which way you think an election's going to go or which way you think inflation's going to go, you could hedge. If gold drops, you might buy another billion. That's what's happening. But again, Michael's getting much more traction, much more publicity, and these guys need to justify their decisions. So they're going to spend more time educating the institutions, trying to get people together. I actually have Michael Saylor, I'm reading now. He's trying to educate Elon Musk because Elon, everybody loves Elon, you know, Rocket Man. I met Elon years ago as well, back when we took a company public that kind of became PayPal. We were in the credit card processing space in 99. Elon had X-Bank. Elon's amazing. He's trying to figure it out, and I'm reading he might move assets off of the Tesla balance sheet into Bitcoin. He's still trying to figure it out, and here's Michael Saylor, one of the best guys in the industry, saying, hey, Elon, come on, I'll teach you. I think Cameron and Tyler reached out. Hey, come on, I'll teach. You've got guys with big egos, big pocketbooks, big parlays into this space who want to justify their decision. And some of that justification comes with education, awareness, more institutional buy-in. Again, I mentioned Scott Menard, Guggenheim. Scott's starting to I'm seeing him pop up a little more. BlackRock. You know, we've done some work with BlackRock. BlackRock is trillions of dollars that Larry and that team's managing. If they start moving that money over, start reallocating the assets, just percentages, it moves. The entire market cap of Bitcoin, the entire market cap is $350 billion. It's insignificant. Now, we in the industry think, oh my God, it's big. It's a third the size of Apple. Think about it. Bitcoin is a third the size of a single company on the New York Stock Exchange. There's so much room for growth and appreciation. Bitcoin's this fascinating unit. It allows institutional participation. It allows retail participation in micro fragment amounts. So you have two parties both driving into the adoption of demand with a limited supply. Hasn't ever happened before. Not in traditional finance, not in traditional stock, not in traditional worlds, not in a world where people can do things on their phone and participate in something that's a global phenomenon. So, will Bitcoin hit 100,000 in 2021? I don't know. But I've got 10 reasons that I think it could. So, we'll see what happens. If you haven't bought in yet, buy. Don't worry about the price. Worry about the percentage. Let's hope it keeps going up. I believe it will, for a lot of the reasons I outlined. That's Stephen Meade. It's the Bullseye Guy. Appreciate you tuning in, following us, and look forward to the next session. All of you guys stay safe through the holidays.